Good morning and welcome to Opening Bell. I'm your host Nickey Mirchandani, and Indian equities are set for a dull start to holiday truncated week. Nifty signals a weak start coming in for Indian equity markets. Nifty may start below that 19,600 mark. That is one thing that needs to be seen in the new October series. Wall Street ended mixed on Monday with utilities falling sharply. Investors actually weighed in the likelihood of Federal Reserve needs to hold interest rates higher for longer. Asian shares at this point of time have opened, at least in the early deals, with big cuts in the morning amidst a surge in bond yields. Let's talk about the cues when it comes to FIIs. Well, no support has been lent there. FIIs continue to be on a selling spree. The sold shares worth around 1,685 crore, and DIIs on the other hand, some amount of perhaps relief there with DIIs buying or continuing to buy equities to an extent of 2,751 crore as on September 29. Well, it is an important day for us. A couple of things have been moving around. The stock of the day clearly is Vedanta, where the demerger is taken up. The company is split essentially into 6 entities now, more 5 to be added apart from Vedanta. But we're going to be addressing that in just a bit. Let's actually speak about what's the strategy of the day. What views do we have when it comes to the technical experts? What's your day? What can you look at? So let's bring in our guest, Kush Bohra, the founder of kushbohra.com, joining us this morning. Good morning there. Start off with your strategy for our viewers, and essentially it is a truncated week. What's your view both on Nifty as well as Bank Nifty?
Hi, Nickey. First up, thank you for having me on the show. Well, this looks like a bit of a time, a correction that we are into. Because if you see, we spent a lot of time, the Nifty at least, trying to maintain that 19,500, 550 kind of support zones. Now, if you recollect, somewhere in the month of August, early September, we spent a considerable amount of time, between that 19,250, 19,550 zone before breaking out, on the upside. 11th October is when I suppose the TCS results are going to come out. Perhaps, that's the cue that the Indian markets are keenly watching for. And we could spend some time here. 19,500 for now seems like a pretty strong base. Maybe if we slip a little, then maybe 19,400 kind of zones. And on the upside, we've seen that, the 20-day moving average, which is close to 19,800, is proving to be a resistance. So I think that's the band we're going to trade in till the results start trickling in. So I think 19,500 to 19,800 would be my zone. The bias could perhaps be, depending on the kind of global cues that we keep, getting every day. But we are perhaps in for a time correction, at least for the next, 8 to 10 days. Very similar moves on the Bank Nifty, if you see. The Bank Nifty sort of held on to that 44,200, 44,000 mark for some time. But this too is facing resistance at that 45,000 level and has not been able to really cross it. Here we see a convergence of 50-day and the 20-day moving average. So the resistance perhaps seems a little stiffer. We're opening a little flat, but let's see. Markets could perhaps trickle a little lower, during the day. For me, this is going to be a range-bound market for the next coming days.
Sure, we could be addressing in that bit of bearish view, I would say, for the markets. 19,400 mark is what we are looking at also when it comes to the technicals levels. But it is a start below that 19,600 mark, just the way we anticipated and just the way Gift Nifty was suggesting. It's down and out in early deals with sharp cuts, let's just say cuts, to an extent of 0.5% out there. Bank Nifty there for you, just to see if there is some amount of perhaps underperformance coming in. Well, Bank Nifty too has surrendered to selling pressure. 44,400 mark. That's been held on to right now. Well, actually, that's also been taken off, floating around that 44,400 mark with cuts of an extent of 0.4% for Bank Nifty in early deals. Let's talk about what we have in terms of the mid cap and the small cap. How are they faring in trade today? Well, it is a selling pressure which has been witnessed across the board, both for frontline as well as the broader index. Cuts to an extent of 0.3% coming in for mid cap. Well, pretty small cap perhaps is a bit of, acting differently at this point of time. Perhaps a bit of outperformance rather, just to put it in perspective. 0.2%, 0.25% of gains coming in for small cap index. It's perhaps a bit of outperformance given the subdued trend that we're witnessing across the globe and the lack of global cues, which at this point of time, let's just say non-supportive global cues which are weighing down on the sentiment of the market in absence of lack of triggers for domestic markets. IT at this point of time down and out with losses to an extent of 0.5%. Accenture earnings, their read-through perhaps has weighed down on the sentiment of ID stocks. Auto stocks at this point of time, sales number have been reported. The index overall is down and out, 0.25% of loss coming in for the auto index too. And in terms of what we have in other defensive names, we have FMCG, which has taken a cut to an extent of 0.5% out there in early deals, and also something in the likes of pharma, metal. That's the one that we need to watch out for. Pharma also has surrendered to some amount of selling pressure right now. What we essentially need to see is how Vedanta is faring. Look at the metal index, 0.3% lost in early deals. Vedanta is clearly the stock of the day. Big corporate development that has taken place over the weekend, where the company has decided to split, rather demerge all the entities in separate parts altogether. We're going to be talking about it in just a jiffy. But let's actually address in the top gainers and the top losers that we have on the screen right now, just to see how the momentum has been shaping up. M&M, Asian Paints and L&T. These are some of the top gainers that we have on the list right now. Adani Enterprises, Adani Ports, HUL. These are some of the other gainers that we have. Well, Adani companies, group of companies are clearly shining in green in early deals. Let's also talk about the top losers out there. If you can bring that back on screen just to see how are they faring up. Eicher Motors, ONGC and Hindalco. These are some of the top losers that we have. Apart from that, we are also looking at losses coming in from Cipla, Maruti Suzuki and Tata Consumer Products. These are some of the top losers that we have. Let's also actually some amount of selling pressure has also been perhaps intensified due to the downtick that we're seeing from Reliance. Perhaps sharper cuts coming in from that index heavyweight, which is weighing down or rather just dragging down the index lower. Let's look at Vedanta. How is that faring up? Because a big corporate development has come through, and just to see if the stock is actually doing well in trade. It's not typically a development which is augured well for the brokerages. They seem to be not excited with this. But the stock right now seems to be perhaps doing well in trade. 1.5% uptake which has come through after the development. It's not typically a very sharp run up that you're seeing, but remains to be seen how does this act out in the entire trading session. Vedanta has announced in a demerger to split business into 6 listed entities. Essentially, it aim behind doing this just to simplify structure and unlock value and attract in big ticket investments in the expansion and growth of each of the business. Let's understand the 6 entities would be, namely, first you will have Vedanta Limited, where you'll also house in Hindustan Zinc, Vedanta Aluminium, you have Vedanta Oil and Gas, Vedanta Power, you have Steel, and Vedanta Base Metals. Essentially, these 6 entities. Bear in mind the fact Vedanta will continue to hold Hindustan Zinc stake, essentially, and Vedanta would fund also investment. The main company, Vedanta Limited, of course, is divided into 6 parts now, but Vedanta will continue to hold Hindustan Zinc. It will also fund in investments in new sectors such as semiconductor and display. Do bear in mind the fact that the demerger is planned to be a simple vertical split, which means for every share of Vedanta, the shareholders will receive 1 share each of the 5 new listed companies. So that's what the development was. Now do bear in mind the fact that this is in total contrast to the amalgamation scheme which the company announced back in 2013. At the time, rationale was and is still the same. It is simplification of the group structure, period. So there is a bit of perhaps unease amongst the investor community as to why the effort first in 2013 to go ahead and consolidate and now go ahead and demerge. So that's a bit of U-turn from the efforts that has lasted over a couple of years. Most of the brokerages have maintained their sell rating on Vedanta post the demerger announcement, barring CLSE, which has actually revised the rating mainly due to stock correction but reduced still the target price due to the capital structure uncertainty, lack of clarity on debt profiles, reversal of part consolidation efforts like I explained earlier, along with Vedanta's funding gap and a lack of focus on core operations, essentially are some of the reasons which have been highlighted as concerns by these brokerages. If you look at what we have in terms of each of the brokerages have to say on the Vedanta demerger, which is perhaps the biggest development that we have in terms of the corporate merger and demergers, let's look at what CLSA has to say. It's raised in the rating to outperform due to the stock recent correction. After a 6% stake sale by the promoter, there was a 25% dip essentially, which is coming on Vedanta. But CLSA has lowered the target price and said due to the uncertainty in the capital structure, they've emphasized the need to refocus on core operation. Citi, on the other hand, has maintained the sell rating and the target price has been revised marginally. It has cited uncertainty if the measures will improve the multiples, that's the ratio, and has also expressed concerns about the leverage. Now, what Kotak Institutional Equity has to say, essentially that has also maintained a sell rating due to an unfavorable risk-reward scenario and has highlighted the reversal of past consolidation efforts and the parent, that is Vedanta Resources funding gap. Investec has a little bit of different view amongst other. It views rather the demerger as a strategic move. It emphasizes the need for clarity on debt profiles before assessment. So that's the word coming in across the brokerages. We've perhaps picked that up and we're going to be hearing about it, talking about it enough and more through the course of the day. Auto sales is what you need to gear up for. The index was down and out, but let's look at Maruti Suzuki numbers. Total sales up by 2.8%. Now do bear in mind that the September sales number or below estimates for Maruti, low single-digit growth in the September sales number. Not a good development technically for Maruti Suzuki. Let's see how perhaps stock doing right now in trade. In terms of Eicher Motors, where Royal Enfield sales are down by 4%, and the number has come in more or less in sync with what the estimates were. M&M on the other side, we are looking at auto sales perhaps being a little bit on the higher side, which is up by 17% year on year. It is a mixed bag of sorts for M&M. Very strong SUV sales growth. However, tractors show a complete weakness at this point of time. But right now, the stock has been doing well in trade. Let's also look at Hero MotoCorp, where the total sales are up by 3.2% and more or less, actually, it's more than what the estimates were. Estimates were to an extent of 5.25. The numbers have come in at 5.36. Domestic sales have come in at 5.19 versus 5.07. To bear in mind, these numbers are also higher than the estimates. Also bear in mind the fact that there is a price hike update which is coming through Hero MotoCorp. The stock seems to be a little bit out of favor right now. It's down and out with losses to an extent of 1% There's hiked in price of select motorcycles. Hero MotoCorp has hiked the prices of select motorcycles and scooters by around 1%. Price hike is effective from October 3rd, that's today, and it's just a part of company's regular review for competitiveness and the positioning amidst the market structure. What I'd also want to talk about is two new kits on the block today. Well, October series is clearly kickstarted on an actionable note, if not for anything else. JSW Infra, which is going to be listing in shares on October 3rd. The final issue price has been fixed at 119. It is the second largest commercial port operator. It's likely to debut on the exchanges with what analyst community anticipates a 15 to 20% gains on October 3rd. At 10, we are going to be perhaps looking at it, how the particular grey market premium is translated or not translated into the markets. But given the strong subscription numbers reported by IPO, there was a healthy performance in the past financial years and a strong parentage support with diversified customer base for JSW Infra might actually give up that listing pop, the one that most of the analyst community are expecting at this point of time. Vaibhav Jewellers is another one where the company has preponed actually the listing date to again debut on exchanges on October 3rd, that's today, and the issue price has been finalized at around 215 per share. There's an upgrade by Jefferies on MGL. The target price has been revised to 1,320 from 1,100. It speaks about recent OEM partnership which should aid the volume growth of the company. That's the long and short. And apart from that, there is a lot of news that we've spoken about. But let's go back to Kush and check with him. What does he make out of something like a Vedanta? His view and the levels, given that the stock has started on a little bit of higher note, gains to an extent of 1.5%. Kush?
Well, yeah, the stock's now actually at its 20-day moving average and the congestion zone of 230 to 240 kind of levels. while this news is of course a big shot in the arm, the stock was actually languishing and had sort of given a very strong breakdown to about 205 210 odd levels. Now from here on, I think once this news has played out, the stock will find its feet. But I think this 230 to 250 kind of zones will probably prove to be a congestion zone, not only in the near term, perhaps in the medium term as well. So for me, this is not stock that I will still participate in. I will wait once the 250 level is taken out, is perhaps when I will have any kind of a positive view on this stock. But till 250, I'll just have it on my watch list.
Okay, perhaps a little bit of caution warranted there. Essentially, you have multiple companies with cleaner balance sheet, less debt issues, perhaps more better corporate governance to go up and lap there. But let's actually go back to Kush and check with him. What does he make out of the auto sales number? What stands out for him within the auto basket, and what is he looking at?
So a lot of auto stocks that actually started running in anticipation of the numbers. And if you see, it's the numbers haven't actually come out all too bad. The stocks that we have on our radar right now, despite the kind of numbers that we've seen, are Maruti and Tata Motors. Now, Maruti is coming off a long slump. It was facing a resistance at around 10,700 odd levels, and that's where we've seen the turnaround happen, and the stock's actually now down. But this dip also for me is a buying opportunity as long as the stock holds the 10,200 level, the recent lows that it had made. So for me, I'll wait. Once this once this effect sort of plays out, I will have Maruti on my buy list. Also, I'm looking at Tata Motors. Again, after a brief while of consolidation, the stock starting to look a little positive from here on. It's taking support near its key averages. So for me, any kind of jump over 630, that level will push the stock to 660 and perhaps even 680 kind of levels. So these are the two stocks that I have on my radar from the auto space.
Right, Kush, we are going to thank you for taking out the time and speaking to us this morning. Indeed, a pleasure chatting up with you. Let's actually navigate our discussion to broader issues now. FII trend has been behaving. Talk about the corporate developments, how Vedanta has behaved early in early deals. Whether or not it's a proposition which is attractive to shareholders or not, that remains to be seen and perhaps figured out a little more in details. But to talk more about the fundamentals, we've been joined by Mayuresh Joshi, who heads equity research at William O'Neill India. Morning there.
Morning, Nickey. Always a pleasure to be on your show.
Well, pleasure is all ours. Mayuresh, kickstart with the important issue of the day, Vedanta and the demerger which has come through. Perhaps a bit of U-turn from the strategy that we saw in the previous 10 years. A bit of unclarity which again has emerged in terms of the debt profiles of each of the company and the leverage thereof. What do you make out of it? Do you think it's a value accretive deal for shareholders?
So two aspects here, Nickey. One, I think if you're probably looking at the entire perspective, when the entire merger dynamics were taking place, a large part between 2011 and 16, and now these news about the demerger expected to come through. What they're probably doing in terms of Hindustan Zinc, the semiconductor assets, probably staying in Vedanta Limited, which to a large part after the approvals come place for the entire demerger will be around 50-odd%, followed by oil and gas at around 22-odd%, and the aluminium business with a 51% stake in Balco, around 16-odd%. Those are going to be the major contributors in terms of Vedanta's EBITDA as we look at FY23 numbers and look forward as approvals come through. Now, the two big issues that Vedanta probably carries in its baggage is the debt repayment of Vedanta Resources, its parent, $2.7 billion and $3.6 billion in FY24 and FY25. Which largely means that the entire restructuring process that Vedanta has now initiated, are we looking at some elements of either partial or full stake sales as approvals come in over the next few months, and therefore pairing of debt with this mode that can probably come through to probably alleviate the pain that is probably existing on their balance sheet. When it comes to the core business, obviously it's an entirely commodity-driven business, whether it's oil and gas led by the cane assets, the copper assets and the zinc assets as well, and the aluminium assets through Balco and its core aluminium business. A lot of these prices, as we see on LME, are still languishing. The expectations of Chinese demand when it returns is going to be a key factor and trigger here, along with the expectations of what stimulus probably gets announced. And therefore, the languishing in terms of the operating performance along with the stickiness that you're probably expected to see in terms of cash flows, or a combination of all these factors, that will also probably keep numbers in check. So to a large extent, with the move that they've probably done, they're probably trying to protect the downside risk that Vedanta has probably seen over the last few weeks. Whether there's an upside element, it remains to be seen what the management does in the next few quarters and how the macros shape up in terms of individual numbers for each of these commodity-driven businesses. And therefore, my take is that it will largely remain range-bound for each or either of these triggers probably unfolding over the next few months. But yes, to a large extent, I think with this move, the downside risk with the correction we've seen is largely now protected, and the worst is probably getting sense.
Okay, that's the word coming in. Worse is perhaps behind for Vedanta, which is one stock which has always surprised the investor community either ways. When there was a stake sale which took place by the promoter by 6%, we saw a 25% correction coming in Vedanta. And today you have the entire deal which has come through and the stock is just reacting to an extent of 1.5%. There's no comparison there. But most of the brokerages at this point of time perhaps see that as a strategic move which eventually will make it easier for the promoter to consider either the monetization or delisting that they've been contemplating thus far. But what's your view on auto sales number? How have they stacked up for you? How are you looking at it? Anything stands out for you?
I think they were a mixed bag, obviously, Nickey, but numbers again should show some element of resilience as we head into the festive season. A lot more will now happen because we are now entering the next 2 weeks, which is the Shraddh season. And there is a typical expectation that no new purchases, no new dispatches probably happen. So once the Shraddh season is largely done with in the next couple of weeks, as the inventory restocking starts happening and the dealer network starts building on its pipeline, whether it's two-wheelers, four-wheelers, and the festive season as it kicks off, a large element in terms of order books being full for two-wheelers, four-wheeler companies. Within four-wheelers specifically, if you're looking at the high product range, the SUVs, the MEVs that you're probably speaking about, I think the demand there has been extremely resilient. And therefore, I think auto numbers should show a good trend as we head into Q3. Obviously, I think a lot of issues that were plaguing the sector as a whole, semiconductor issues, inflation costs in the past, inflationary pressures when it comes to input costs, whether it's aluminum, copper, etc., have come off sequentially, but they're still higher year on year. However, I think the pass-through that has happened at the beginning of the year and the stability that we are now seeing will ensure that EBITDA margins remain a lot more sanguine as we head into the next quarter as well. And therefore, I think Maruti within the four-wheeler space is something that looks good on our own lens. Both the EPS-RS rating looks stable. Expectations of market share gains is what the management believes a better product mix would also ensure that margins remain extremely stable. Cash flows would remain resilient along with stable margins as well. And if the market share gain presumptions are to be believed, that Maruti is probably aspiring to get back to that 48-49% mark. And if they achieve it slowly and steadily, this probably remains to be one stock that can do well over the medium term. Within the commercial space, Ashok Leyland is something that we like among our global focus lists, stands out in terms of both the market share that it has, expectations of new orders that are probably expected to come its way, and new product launches with below the 2.5-ton category, which was absolutely absent, and adding distribution network in the north and the east should abet earnings growth. So I think autos should continue doing well in a scenario where a lot of sectors might face some element of earnings consolidation.
Mayuresh, do you follow cricket closely?
Sorry, I didn't get your question.
Okay, World Cup is starting in October 5th. Are there any themes perhaps that you're going to be tracking in? Something in the like of Indian Hotels, something in the like of Jubilant perhaps, or Aviation Interglobe? What are the themes that one could look at?
So absolutely, I think it's going to start in a couple of days, and hotels as a theme might continue the momentum. We've already seen a huge mad rush in terms of both ticket sales, what we've seen for the India-Pakistan match happening in Ahmedabad, an absolute sellout in terms of not only hotels, Nickey, I think even a lot of hospital beds, as we read in media reports, have probably been booked just for stay, as there's no options were available. So I think hotels as a theme might continue doing well. But even structurally, I think the logic in terms of more consolidation happening in the industry, the expectations in terms of ARRs actually showing an uptake and the occupancy rates showing an uptick as well. That really augurs well in terms of the sector as a whole. So chalet hotels, Taj GVK, Indian hotels could continue their momentum. In the similar breath, I think QSR, what we've seen in the past and as an historical trend, once these sporting events start coming through, I think a lot of these food deliveries also start getting back in action, and that's been an historical trend. Typically, they're going to be day-night matches, and therefore, I think QSR players like Devyani, which probably might continue doing well because the numbers were really good even in the past quarter. Something like a Westlife can continue doing well. Yeah, so I think these two sectors can remain in focus and in momentum.
Okay, Mayuresh, last question that I have is perhaps relating to cement sector. If you talk about Ultratech, industry leaders come up with an update where the volume growth has been essentially more or less what the market share, it continues to outpace the market share growth and all of that. With that in perspective and perhaps a slew of price hikes which have been taken by multiple players in multiple regions, how are you looking at the entire theme right now in the pre-election year?
So it looks very promising. And as we head into Q3, Q4, the volume offtake should be relatively better. As execution will get accelerated, as you rightly pointed out, Nickey, for both state as well as general elections happening in March, April of the next calendar year. The expectations in terms of fast tracking of projects will mean that larger utilization levels across plants as these projects are executed. And because of a better pricing environment that they are seeing, both in terms of input costs going up and the pass-through that you've seen in end product prices, as well as genuine demand, which is pushing up the expectations in terms of utilization levels for the sector as a whole, is expected to cross 75% largely across Northwest, as well as some parts of South and East as well. And that augurs well in terms of the operating leverage for a lot of these players. Input costs are moving higher, and therefore how Q3, Q4 will play out in terms of pass-through of these prices is largely going to be dependent on how individual companies hike their prices per bag. But I think they should largely pass it to probably protect their absolute EBITDA and the reported EBITDA per ton. Having said that, Ultratech's numbers were really good that they probably posted. They should continue doing a good show as far as Q3, Q4 is concerned. More capacity is getting added. And therefore, I think with increasing demand, better utilization levels, and better leverage, the largest cement player should report better and stable numbers as we head into Q3 and Q4, albeit rising prices that we've seen. The other stock that you should probably have on your watch list would also be something like a Dalmia that we probably looking at.
All right, Mayuresh, thank you so much for that perspective. Completely running out of time, but thank you so much for joining us this morning.
Thank you so much.
All right, JSW Infra is the stock that you need to watch out. Stop at 10 a.m. with the listing gains, perhaps, which is anticipated for the count of 15 to 20% range, thereabouts. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.